Welcome to the Second Bite Podcast, where we talk with top entrepreneurs and CEOs about creating valuable companies through creative transactions. Now, let's get started with the show.
Welcome back to the Second Bite Podcast. We are back to the Going It Alone series, and with me today I have Alex Rossman. Mr. Rossman, Alex, so good to have you with us.
Thanks, Todd. Happy to be here.
Yeah, and the business is Rossman Media, correct?
That's it.
Excellent. We are going to get into a really good conversation and unpack a few of the things that you had shared with me before in the past. Before we do that, I just want to thank our folks, our sponsor, which is the good people at Markham. Markham is a accounting firm, a regional accounting firm. Used to be called E. Cohen. People might know Don Cantonez, who's been on the podcast before. Those guys are great. They help my clients look as best as they possibly can from a financial perspective and guide them all the way through diligence and to close and help with working capital. They do everything. So they're terrific. Thanks to our friend at Mark. So, Alex, thanks again for spending time with us on the podcast. You know, the feedback I get is that people love the podcast because they get to hear directly from guys like you that have built substantial agencies about how they did it. And I think it's always helpful when people realize it's not easy for anybody, right? There's potholes, there's twists and turns and, you know, all on and on and on. So I want to unpack that, but let's start with, tell me about Rossman Media. What do you do and who do you do it for?
Yep. Great way to start. So Rossman Media started actually 7 years ago, getting pretty close to. And I started the company really, with a very creative background. I started actually as a musician in college. I was touring around doing fraternity and sorority shows, and I did a lot of my own kind of self-promotion. And then kind of starting my corporate career, I went into a company, ADP, big payroll company, and got my chops really in the sales and marketing side of things. So what I realized very early on in my life, I'm very entrepreneurial. So everything I do is, looking at how can I build something from the ground up into something that's awesome and provides value to people. And so I really combine my creative side and my newly found sales, side of kind of my core competencies. And I started my own thing, and it started as a marketing agency. And I was in San Diego at the time when I started the company, and I was knocking on doors, every business I could get in front of and trying to get business. And fortunately, our very first client was the San Diego Chargers when they were in San Diego. Probably took 10 different meetings to get into the boardroom with them, and finally did. And they bit the bait, and they were our first client. And then from there, things just really kind of snowballed. And, we bring on a client, bring on a new staff member. And now we're, 7 years in, we've got 50 full-time employees and growing what seems like by the day. And, we serve predominantly enterprise or established businesses that are really looking at accelerating their growth on social media. So social media has kind of been the core thesis of not only what we're good at, but it seems to be a really sticky service because, we're in the day and age where, social media needs to be a part of your maintained service as a company, right? You need to have that brand awareness. And whether it's through social media management and content creation, paid social, influencer marketing, we cover everything in terms of social media, and now even beyond as we kind of expand through M&A. So that's kind of a full 10,000 foot view for you, Todd.
Well, that part's super helpful. I want to ask this because there's a lot of guys that start an agency. And particularly, there's low barrier to entry to start. You get a couple clients, you're in the game. Starting with the Chargers is probably more dramatic than most people do. But they pretty quickly bump into a ceiling of complexity from a business perspective.
Yeah.
Well before they get to 50 employees, right? How have you managed running the business as a CEO, which clearly you are? And do you remember any of the early struggles and how you overcame those?
Absolutely. Yeah, I think, I always say that, a lot of the misconception about being an entrepreneur is that there's a real clear path to the top, right? And so everybody thinks, entrepreneurs are sitting on the beach with a Mai Tai just collecting, dollars coming in the bank account. It's not the case, right? So I look at it instead of, going straight to the top, it is a lot of ups and downs. But as long as exponentially you keep going up, that's all you need to worry about. And so I think what's really complex about, running an agency is there are so many hurdles. You're dealing with people, right? So it's not a sexy tech company where you've got software as your kind of leading focus. You're dealing with people and, both from a client side and your own staff. And so I think that's always, the hurdle is trying to find the right people. And sometimes it takes, you hire 12 just to find 2 really strong people, right? So that's always an ongoing, focus of ours is just finding the right people, creating the right processes. And I can tell you right now, there is no better way to learn than falling on your face and trying to figure out how to get out, right? And I think probably all my best learnings is just through experience, right? You see what works, what doesn't work, the things that don't work, just make sure you don't make the same mistake twice. And, from there, it's, you continue to build a really great company.
And so give me a rough idea in terms of the size of Rossman.
Yeah. So we're
revenue or whatever you're comfortable with.
Yeah, absolutely. So trailing 12, we're a little over 15 million at top line. We'll be having to run around, $1.5 million at EBITDA. And then this year we've got, our sights set a bit higher for us, probably be around the 20 million mark at top line, about 3 million at EBITDA. So we're growing quick. We've definitely changed our strategy from purely organic growth now to inorganic and kind of a tuck-in roll-up strategy that's worked out really well for us.
And how many of those have you done, the tuck-ins?
So we've done 2 so far. We've got actually another 2 that are anticipated to close, one this month in March, and then one next month in April.
And so if we can, maybe go back to the first acquisition, because you're, let's just go back in time a little bit. You're around 10-ish of revenue, profitable, but that's early stage to get into doing acquisition. So if you could, maybe you could share, what was the mindset? Why did you approach, hey, I need to acquire something? And then how did you arrange to make that work? Were you concerned about due diligence? How did you know it was real and you weren't being scammed? And from there would be super helpful.
Yeah, no, great question. And, I have a lot of these conversations now, and I just learned through so much through experience. But what I can tell you is that, the marketing industry space is very fragmented, right? There's a lot of agencies out there. They're popping up all the time. And some of them have really great specialties and they've got really great people. And you and I talked about this in our first call, but it's a very bootstrapped way of looking at M&A, right? We're not a big, massive company that's, private equity backed. And so a lot of this has really been, the cash on the balance sheet, identifying some debt facilities to kind of get these through to the finish line that makes sense for our cash flow. And, what we've kind of looked at is, what can we do at the size and scale that we're at now? And where will this take us? And so, my mindset is always, 5 years ahead, 10 years ahead. What's the end goal? And for us, what we've realized is we've kind of taken the acqui-hire route, right? So as we're identifying acquisition targets, we're looking at the qualitative and the quantitative, right? I'm very much heavily in the qualitative strategic side of looking at deals. Are they good people? Do they bring over a similar type of clientele that would mesh well? Is there cross-promotional opportunity? So I look at all the kind of strategic side of these deals. And then, I have now a diligence team that's in-house that will do all the quality of earnings, all the financial diligence. And then we have legal counsel that does all of the legal diligence now. So now we've built really a team behind it. But what I can say for the first 2 is the first one really was our keystone acquisition. And that one
Can I pause for a sec? Because I don't want to get too far away from this.
Yeah.
So, because you mentioned a couple things. You said now that we're identifying opportunities and blah, blah, blah. How are you doing that? Where does that pipeline come from? How do you identify them? And how do you know what's a real opportunity or not?
Yep. So we focused predominantly on off-market deals. So these are agencies that probably have never thought about selling, or if they have, it's kind of a forethought. So we're not going through, at least at this stage, kind of broker relationships or things that are kind of handed over to us. It's more really going out and prospecting, similar as you would to find a new client, right? So I've been able to have just great conversations with agency owners over the last couple of years, and just trying to understand their motivations. What do they want?
You just reach out to them on LinkedIn or you meet them in industry things or?
No, yeah. So we have an email prospecting system that, similar to identifying clients, we're doing the same thing, except we're focused on agency owners, right? So, we get basically a call set up. Usually that introduction call is talking about, hey, what's the motivations of the company? What's the size and scale? And then from there, if we feel it's a good mutual fit, at least from the gate, then we'll move into an NDA, collect some preliminary financials, and then really start crunching the numbers from there.
So takeaway number one, it's always interesting because I'll have people say to me from time to time, hey, keep your eye open for anything like this and this. And that never happens, right? It just doesn't. I mean, there's occasional, you bump into a guy at an industry meeting or what have you. But you guys have a dedicated effort to trying to identify opportunities for you to acquire, whether it's something of size or an acqui-hire, something that'll add value to your agency.
Absolutely.
Tell me about the due diligence team, because I know that this is the part that makes people nervous, right? How do I know what's really there? And it's also quite a distraction. So can you talk about how much of a distraction you find this to be in terms of effort on your end, and maybe identify how it works through your due diligence team and what people are doing that?
Yeah, I mean, I've gotten the company to a position where a lot of my time is spent on that. So, what I will say is, yes, it's great to have the team because it takes a lot of, time off my plate to dig through P&Ls, look at balance sheets, look at projections, break everything down, from a quantitative side of things. So really how we've done it is we've delegated that task, right? So our finance team's looking at the financials. I'm doing more of the qualitative stuff.
So do you have I'm sorry, Dan, Alex, do you have like a CFO or somebody that has experience doing acquisitions, or just somebody that knows the industry well enough to say, this isn't matching up right, or this is wrong, or what have you? Yeah,
right now we have an M&A advisor who is kind of special to, the media space. Met him, a while ago, and he said, you know what, I can at least help you kind of as deals come in on an ad hoc basis and really kind of take a look at, the numbers and see if it makes sense. And so that's worked well for us because it's not somebody in-house quite yet. I think we'll probably get there, in the next probably year or so, but this has worked out really well just to have a trusted source that knows media companies, knows how to value them, and can take a lot of that off my plate.
That's great. I think it's also really important, the comment you made about you've got time to spend on this now, which tells me that means the business is operating well on its own. Was that it was obviously a thoughtful exercise on your end. Did you design the agency to run on its own so you could focus on this, or did you just design a business that could do that, and then you thought to yourself, what else can I do now to add value?
So I'll tell you, I mean, this goes back to the beauty of acquisition. The first acquisition that we did was strictly to bring on the leadership team of that company that we acquired. And so in doing that, these two individuals, I'll throw their names out, McKinsey and Kelsey, they came over from a company, Davies and Dixon. And,
so that was their company and you acquired it.
Exactly. Yep.
And how did you meet them?
You know what? Through email and LinkedIn. Just kind of, that's where this conversation started. And we probably talked for a good 6 to 9 months before a deal was actually even, drawn up. And it was just, we realized very quickly it was a good cultural fit. They had a very clear vision for growing something bigger than what they knew that they could do by themselves. And it just was kind of a match made in heaven. And they came in and truthfully, I mean, they're building out the entire systems and processes. They're helping with bringing a new business, identifying potential acquisition targets. So I think sometimes that keystone acquisition can be so important, not just from buying up revenue and EBITDA, but buying good people that come over into, I shouldn't say buying good people, but that's kind of the indirect, value that comes with an acquisition, particularly an acqui-hire.
And did you know you needed that management, or it was just a great outcome from that transaction?
I knew we needed it. If we were to get to the size and scale that I know we're, continuing to achieve, there's no way that I could continue to handle it as is. And I think the great part is when you're acquiring an agency, they know the agency space, right? So there's less of this learning curve. There's more just adapting to, what's worked for them, what's worked for us, and then kind of find a good middle ground that is scalable. And so I would say, our back end of our agency is the most streamlined it's ever been. And a lot of that is due to a great first acquisition.
Yeah, that's wonderful. And Clutch has you ranked as the number one social agency on Clutch. So
yeah,
there's validation to your statement of how well the agency is actually running and performing.
Yeah.
So this might be I'm sorry, go ahead.
I was just going to say, we've been very fortunate. We've gotten, a lot of great clients that are saying good things. So that's always a good testament to the work for sure.
So maybe the best question of our episode, you've had a bunch of conversations with, potential opportunities, some good, probably some less effective. Is there one or two things that are an early indicator that this guy or woman is just not going to be right for us? Or the opposite of that, wow, this is something I want to stay in touch on?
Yeah, absolutely. I think, that comes down to culture. At the end of the day, I think, like I said, there's kind of this, idea that, revenue is only good to some extent, right? You can buy up a book of business, but if you are planning on bringing over the people of that deal, you really want to make sure it's a good fit, because one bad hire, as we all know, same type of thing with an acquisition. You bring in somebody that puts kind of a kink in the spoke, it's felt throughout the entire organization. So I can usually tell pretty quickly of, if that's a good cultural fit. And then I think, as we look at financials, that's a whole other.
Alex, is there something on the cultural part that is a trigger or a critical component that you think you look for?
Yeah, I think it's just pretty simple. No assholes.
Yeah.
No,
still a good rule, right?
It's still a good rule. I think, you want people that, are collaborative. I think somebody, I'm not going to say obviously any names, but, I've been on calls where it's, I just want to sell my business. I want out, but the company's not in a position where that owner can leave, right? Because they're so integrated with the day-to-day. And so I think that type of mentality of like, hey, I just want to take all the chips off the table, be done. For what we're doing, it doesn't make a lot of sense, right? Yeah. Because we truly we see the value of the people and them wanting to stay on and continue to realize that upside.
I think it's interesting because the reality is, and we do the same thing when we talk with clients.
Yeah.
But you said in the first conversation, what you try to do is understand what it is that they want. Because quite frankly, what you want doesn't really matter, right? If right. It's nice if it fits, it's critical if it fits, but you got to understand what it is that they're really, and we always talk about trying to make the person on the other end of the conversation comfortable enough to tell you the truth, right?
Right.
And so when you engage in that first conversation, is there a kind of a process that you follow in asking questions and learning about the business?
Absolutely. Yeah, that's a great question. I mean, I would say just like with, if you're selling into a client, that rapport building is so critical to a lot of these initial conversations of getting that trust. I mean, I can't tell you, if you just hit up somebody blindly and say, hey, send me your financials and, it doesn't work, right? So like you said, which I think is very, very valid, is figuring out the motivations, where are their pain points? How does an acquisition serve them? And having those candid conversations early on, right? And sometimes, you have some folks that are saying, hey, I'm not open to an acquisition. And then you start to talk to them and they realize the potential there, right? They see a company that's growing fast, as Rossman Media is, and they start to think, hey, have I hit a ceiling in my own business where it may be beneficial for me to actually jump on board of, a fast moving train, right? And so I think, again, just having those open conversations, we absolutely have kind of a questionnaire that we go through that, helps, further qualify and see if it's a good fit for us and for them.
Yeah, it's a smaller slice of a larger pie. And, we've talked about this on a bunch of episodes. Dean from Worth e-commerce is a good one to look up. We did that transaction with SmartBug, and it's worked out extremely well. We did transactions and actually with private equity last year with both Center for Sales Strategy, Matt Sunshine, and the people at Demand Drive. And those guys are now looking to do acquisitions with a nice checkbook behind them.
Yeah.
And so that's an interesting approach for growth. So your first one, was it quote unquote two guys with a shop essentially that you acquired?
Yep, it was two women-owned founders out of Seattle, Washington. Very similar revenue model. So all the acquisition targets that we're looking at are revenue, like recurring revenue models. So retainer subscription model. We like that model best because it really just helps to the stickiness of a service. And so again, that was kind of part of that initial criteria. And then it was really, again, we saw so much value in the two owners. I mean, they really, they knew what they are capable of with their own company, but I think they saw the value of the upside with merging with Rossman Media. And it was, a great kind of keystone acquisition.
Yeah.
The stage for future tuck-ins.
Because then they don't have to build out finance. They don't have to build out HR. Right, on and on. Now, these two ladies are focused in the social space, right? So you've made the decision, we're going to stick to social and not get into SEO and paid and email and the rest, but we're going to have other capabilities within the social sphere. Is that accurate?
Yeah, so that initial acquisition was very much that, Todd. It was, we're looking at, comparable service models. So we didn't have crazy integration needs. We didn't have to reinvent the wheel. We wanted to continue to build on the capabilities that we currently have. Now that's expanding, as we're looking at other acquisition targets. I mean, what we've realized is, our clients are the most sticky. I mean, they stay with us a long period of time if we're able to offer them a larger suite of services, right? Something that's recurring. They know that they can plug into an already existing infrastructure that has social media, that has media buying, that has this and that. And so as we've developed out, I will say, we have looked at expanding into complementary services that may not just be social. But that first acquisition was very much complementary service model, similar type of clientele, and it made for a really smooth integration.
And so let me ask you, and then I want to talk about the second acquisition.
Sure.
But just as a side, I know you guys are big into TikTok, right? As far as a service.
Yep.
Is that something you guys developed from the ground, or did you pick the capability up in an acquisition?
Yeah, no, great question. So that was off the ground. And we built a really strong corporate partnership with TikTok, so much so that they were actually referring us business from a corporate. So they would say, hey, big company Airbnb wants to advertise on TikTok. We need to send this over to an agency. So we're actually one of the first 9 agencies that partnered with them on a corporate basis, which is pretty cool because, they invite us, like we just got invited to South by Southwest. We're meeting with them typically weekly to talk about, new changes to the algorithm. And so we're able to stay kind of ahead of the curve. And so we built out a service model that's really built around TikTok. And it's been a big chunk of our growth over the last couple of years is kind of that focus. Now we manage all social platforms, not just TikTok, but what we've seen is we find a good balance of creating content at scale. So we actually invested in real estate where we're shooting all of our content out for our clients. So our clients will actually send product to us and we're pumping out video content for TikTok on a monthly basis, which is pretty unique and definitely a differentiator in the space.
Wow, that's interesting. So you've got one acquisition underway or completed. Did you move right into doing the next one? Did you say, wow, this is going to really work for us? Tell me about number two.
Yeah, we did. Frankly, it was, we realized it worked. And so the second acquisition closed in November of 2022. Similar type of scenario. It was two owners based out of Tampa, Florida, and their model was kind of a fractional CMO model. And there was some strategy behind kind of targeting them as, we've realized that our clients need senior level talent to kind of walk them through, help analyze performance, kind of look in terms of pro forma of how, they're going to continue to build their strategy. And so this was just a really complementary fit to that. And so similar size and scale, I would say, as the first one, maybe a little bit bigger. And so, again, it was an Acqui-Hire. Both of the owners came over. They're now in a VP of marketing and a VP of strategy capacity and helping to really build out that division. So it was a good second acquisition as well.
So some of the complication that I see with an Acqui-Hire is oftentimes guys want to get paid something up front.
Right.
Oftentimes they want more of a salary. They don't have stickiness. Can you share a little bit about how you set up the economics and the motivations around the two transactions, or maybe the four as you think about them that you've done?
Yeah. So, I'll say that, and I know you know this, Todd, it's the deal structure is everything. And, what we've really done is we want to preserve the upside. And so the way we do that is, there's a certain cash at close component, which is usually, pretty equitable. It's pretty industry standard that can range anywhere from, a low end 20% on a high end, 50, 60%, depending on the deal. And then there's usually, built-in earnout or a promissory note, kind of a combination of both to kind of preserve the upside. And then really the, differentiator here is the owners now then come in with a salary on top of that, and usually a commission structure built in. So all new business kind of flows through, that agreement. And what's kind of, again, unique is that, as we're talking with agency owners, one of the main questions I ask is, where do you want to be spending most of your time? Where do you feel you provide the most value? And I'll tell you, most of them just want to spend time selling and bringing in new business, helping with strategy. And so I think that's, again, with these Acqui-Hire scenarios, a great way if you want to start building your business development side of the business and really make sure that there's some upside in addition to the revenue that you're acquiring.
And the upside comes from commission. Is there any equity component in Rossman?
So there's not. So the deals we do is 100% buyout. And, we're open to other types of deal structures, but typically that's what's worked well for us is basically 100% buyout.
And so when you think about, and I know you've got one in March and April.
Yep.
And assuming you're going to do more, is there, in case for somebody that might be listening, are there areas specifically that you think you'll target to continue to fill in from a services perspective?
Absolutely. Yeah. So I'm every day looking at, where can we be better? And, media buying is one, and kind of the performance marketing side, we're looking in pretty heavily right now. So actually the acquisition that's coming up is pretty heavily geared towards the media buying space. And that's everything from paid social to paid search to OTT. So they expand the gamut. And, again, looking at other services that are complementary to ours. So, we're looking at a SaaS platform that's specific for influencer marketing. So adding some tech enablement. Everything we do is obviously very strategic in nature. We're not a financial acquirer. We're really looking at, hey, how can we find the deals that are going to best serve our clients and theirs and just find a good mutual fit. And then hopefully, down the line, we find a good financial partner where we can get really competitive and look at larger deals.
And so that's code for partnering with private equity, right? Where you can take some chips off, but then you can really start slinging a checkbook around.
Absolutely.
So when you think about, so let's do this. 23, if things go well, you'll be somewhere close to 20 million of revenue.
Yeah.
How much of that revenue will come from social, and how much will come from services surrounding that?
Yeah, great question. So it'd be about 70% social. So we're still what we would consider kind of a socially led or social first agency.
Yeah.
And that I think will always remain kind of at the core of what we do really well. And then really the other services there are kind of more supportive than anything as we identify kind of more needs of our clientele. But yeah, we're still at the core a social first agency. We believe that all good marketing starts with some sort of social component.
Yeah. We in your neck of the woods, we had a really good episode with Mike Mothner. He's the CEO of W Promote.
Yep.
And they partnered early with private equity and then just recently did another much larger transaction with private equity. Mike continues to run the company and on and on. For listeners, you should check that one out because it's great. But Mike didn't really have a specific time or event in mind that said, now we're going to get to go check private equity. It kind of came to him through a relationship.
Yeah.
So long-winded way of saying, when you get to, is there a mark? Is it 20 or 25 or some number where you say, okay, now we're going to start to look for a private equity partner that can help us grow from 25 to 100 million? Or do you think you'll just kind of know that when you get there?
It's a great question. Something I kind of go back and forth on, honestly, Todd. But, what we've done now is we've created milestones. So, we're looking at things as, what's going to be the first bite of the apple and when does that happen? And then, looking for a financial partner that, I'm kind of the belief that I would like to roll equity into something bigger that I know I can continue to take part in. So, for us right now, kind of that, I guess, number that we have in mind for EBITDA is we'll probably start hitting the capital markets at the 3 million of EBITDA mark, kind of minimum. And I think that's where we can achieve some strong liquidity and then have some great upside if we find the right financial partner to really believe in kind of this tuck-in roll-up strategy. So that's kind of our, I guess, benchmark that we're looking to hit as kind of our first milestone.
And so if I can do math in my head, that it would probably you'd probably realize those numbers towards the end of 23. So maybe into 24 is when you'll start to look at that.
Yep. You hit it right in the head.
That's great. I think this has been a great episode, Alex. So thank you so much. I think there's a couple things that are great takeaways for me. Number one, you're probably making it look easy, but it's not, right? It's a ton of work and effort and none of it's easy, right? From outreach to getting a deal over the finish line is all challenging.
Yep.
So for as much as you shared, that is, greatly appreciated. It will be very interesting to watch you continue to grow the agency. And I think it might be wonderful to have you back on, in a year or so, perhaps when you've taken your first bite, and then we can talk about, how you're going to accelerate from there.
Yeah.
But I also, for listeners, in the show notes that come with the podcast will be access to or how to reach out and find Alex if you think that there's an interesting potential fit with your agency and Rossman Media. Any last thoughts or words of wisdom, Alex, that you would share for someone growing an agency?
Yeah, you know what? I will say, the agency space is very complex. I feel where you're at in probably every stage of growing your business. I would say, and it's probably pretty cliche, but just keep going, because I think there's a lot of times where you hit those either a plateau or a dip, and it's really easy to kind of throw in the towel and say, I'm done with this. There's no way back, forward. But what I can tell you is just keep going, keep plugging away. There's always capital out there. There's always a solution out there. There's always a good partner out there. You just have to keep looking, keep your eyes open. And ultimately, I think you can build a very successful company just through, persistence. So that would be my words of wisdom, Todd, just based on my experience as of late.
I think those are great words. And I would double down on that and say, if there are challenges, there are other ways to get to the promised land, as we would call it, other than just grinding it out. And sometimes that would be an acqui-hire to a larger group. Sometimes that's private equity. Sometimes that's a strategic. It's the reason why, transactions can be so effective depending on the circumstance. Alex, it was great to get your insights. You were a generous guest, so thank you for that. Thank you to our friends at Markham for their continued sponsorship of the podcast. And Alex, we'll watch with great interest your future success as well.
Amazing. Thanks, Todd. Appreciate it.
Thanks for listening to the Second Bite podcast. We'll see you again next time, and be sure to click subscribe to get future episodes.